I thought I'd make this video just purely for the fun of it. So looking at the Asia, it's a beta Asia unit. This is just how I like to have a chart set up. So it's very clean. There's nothing on it. It's basically a day timetable, volume with a 30-day moving average on it. I'd like to obviously see if the volume was up in order to buy the stock, but it's sort of a bit all over the place because it's an ETF, which is normal. The RSI is around about 65, so it's saying it's still good value. Anything above 70, you start to worry about whether the stock will move down. It would have been good if the 30-day OBV was crossing, or the OBV was crossing above the 30-day OBV, the moving average. So all I'm saying is there's not a lot of volume again at the moment for the stock, but again, it is an ETF. If I took a punt and said, roughly where's resistance, because I like to look at support and resistance type levels. If I've got my little line and I said, well, there's a resistance area, sort of here, you can see how it sort of gets to there and sort of fails a bit. So if I double click on this, and I've got little things set up, and so I'll change it to resistance area just so we can see that on the chart. And then you can see that there's another one here as well. So if I go and click on this one here, and so this is kind of like another resistance area, and change it to say resistance area. And so you can see that, in the past the stock's hit there, it's come back down, it's sort of gone back up, got sort of stuck a little bit, come back down, gone back up, hit it, come back down, gone back up. It's gone up as high as that, then it's come back down. So we'll move in and clean it up a bit. And so you can see it's back again at this sort of next resistance type level. Now the question on the group that was asked is, if you were going to buy this or trade this, where would you put a stop loss? And so it's an interesting thing to do. I'll show you two different ways that I do a stop loss, or in my case a trailing stop loss. So let me get rid of those two lines that I just added. What I like to do is I like to turn on my Bollinger Bands, because Bollinger Band is basically a 20-day moving average. That red line in the middle is a 20-day moving average, and then it's got two standard deviations away from it. So you can see that as the bands get wider, the stock sort of makes a move. As it gets narrower, the stock is sort of going through a consolidation type period. People might talk about that could be a little Bollinger Band squeeze there, and if it's sort of squeezed a bit, then it's likely to break out. So one way of doing stops is to place a hard stop roughly below the bottom Bollinger Band. That's a very, very common way of doing it, because it's 90% of all movement will take place. I think something like this is this statistic that says something like 95% of all movement will take place within that Bollinger Band. So you can see that there's a lot of movement. There's a few sort of minor breakout areas, but 90% of the traffic takes place inside that. So that's one way of doing it. And then another way of doing it is you might say, well, it's a bit of a momentum play, and so while the momentum is strong, if it's above that red line, I'll stay in the stock. But if it was to break down below that red line there, then I'd sell it. So you can see there's one stop here at $5.80. You could say, I could say stop loss potentially. And the other one I could do is I could say, maybe if I wanted to hold it long term, I might put my stop down there. If I wanted to hold it shorter term, I might put it just below where that middle line is. So I might put it around here. So it's just below that red line, because remember that line will come up. So maybe I'll put it roughly where that line might be in a day or two. So I might put it here. And so I could say that this could be a stop loss area. So that's two different ways that you might put a stop loss. But you can see if I go from the top up here where the price is now, and I go down to this one, you can see that's roughly 3.5% down. So that's not too bad, but it's fairly tight. And this next one is down around about 8%. So you can see that's not too bad. So you might have a stop loss around 10%-ish, but there's a fair bit of downside. But the smarter way that I could suggest that people might do this, if you get rid of those two stop losses, and then what you might do is you might say, well, that's the stock's sort of been within these two lines for most of its journey. But what I'll do is I'll put in a linear regression line. And so linear regression is quite interesting. So that's a 90-day one. And so you can see that 90 days ago, this stock has stayed, let's say a 3-month period, it stayed within these bands, this whole way through. It only broke out here, which is a bit of an anomaly, but it stayed all the way through these lines. And so what you could then do is you can say, well, the distance between those two lines is roughly from there to, let's say, there. And I'm trying to sort of get from that point to that point, the closest two sort of points. So, rather than have it down here where it's going to be slightly longer in theory, that should 8.65. You can see if it's sort of edge to edge, then it's roughly around that 8.43. So if you wanted to have like maybe a 10% stop loss, you'd capture all the movement of this stock through this period. That's over roughly 90 days. So that's again for one of your slightly longer term holds. If you wanted to capture the movement over, let's say, 30 days, if you were going to hold this for a much shorter time period, you might change it, this one here, to say change it to 30 days, just 1 month. I just tend to look at those sort of time periods. And you can see here that over the last month, the stock has again stayed, most of the time within those couple of bands there. You can see there's a little slight outlier there, a little slight outlier there. And so what I would then do is I would then go, when I move my little tool again, the distance from that line there to roughly its closest point is around 3.77. So with this stock, if you're only after a very short trade on it, you could probably put a 4% stop loss on it. And so what I would do is I'd probably put a 4% trailing sell that I'd have just sitting on that stock. And then that way that, no matter how much it goes up and down over the next little period of time, I'd probably put 5% just to make it a bit wider. You can see that, 5% stop loss would have kept this stock roughly, over the last 5 days. And you can, again, if you sort of look at what's the highest high point, which is roughly here, versus the lowest low point, which is roughly here. See how that was the sort of high point, and it's only gone down, roughly 4%. So a 5% stop loss would have kept you in that trade. A 4% stop loss would have kept you in a lot longer. So that's just, a lot of different ways of maybe doing a stop loss. Totally up to you how you do it. But I just thought I'd share that that's a couple of different ways that I might look at a stock and think, where will I put a stop loss? And the other thing that people do, of course, is they'll, put a moving average type chart up, and they'll say, as long as it's above the 20-day EMA, I'm happy to hold the stock. It's fairly aggressive. Some people will look at the 50-day moving average, and they'll say, well, I can put my stop loss there. But again, it's totally up to you how you do it. But it's a stock that has got a bit of momentum at the moment, and so it's just up to you as to how tightly you want to control your stop loss. Anyway, I hope that's maybe a little bit interesting, if not overly confusing.